I would like to say hello to everyone. My name is Barbara Catlow with Drive It. We're part of the Tremco Construction Products Group, and it is my pleasure today to introduce our lunch speakers, who are sneaking up behind me as I speak here. This is Zach Waldstein.
Hello, everybody.
Oh, wait, we need clapping.
You don't need to clap for me.
I hear he's a scratch golfer, by the way. I don't know
No.
if that was just a rumor. And Anthony Lapiana.
Yeah.
They are both with Zurich North America, and they are going to be giving a presentation today entitled Mitigating Risk, Maximizing Profit, Advanced Loss Control and Underwriting Insights for EIFS. This has certainly been a topic of discussion amongst us here within EIMA for many years, and we're certainly looking forward to this discussion. I had some nice conversation with Zach earlier, and he's looking for some insight and some input from people toward the end of their presentation, so I'm sure we'll have some great conversations and learn what we can do to help the situation that's continuing in the marketplace today. So without further ado, gentlemen.
Thank you. So, good afternoon, everybody. I'm Zach Waldstein. We are going to spend the next 40 minutes or so talking about insurance, and I apologize for that. In preparation for this presentation, Stephen had shared with us some frustrations amongst the folks in this room about the availability of insurance, the breadth of coverage available, the cost for insurance. So really what we want to focus on today is helping you all appreciate why you find insurance expensive and hard to find, talk about some of the dynamics that the insurance industry is reacting to, and then provide some tips and tricks on how to improve your risk management protocols to help improve your ability to find coverage. As Barbara said, hoping for some Q&A. We've got, I think, about 1,000 slides we're going to go through today, a lot of content. So I would ask, please hold your questions till the end so we can get through as many slides as possible. Promise we'll have plenty of time for Q&A at the end. Oh, thank you for that. So I'm Zach Waldstein, like I said. I'm the Workers' Comp Technical Director for Zurich North America. I've been with Zurich for 11 years now. I've been in the construction insurance industry for over 20 years. And in addition to my day job representing the workers' comp portfolio within Zurich, I also chair our global community of construction SMEs to help provide consistency and uniformity in how our company operates in support of the construction industry across the globe.
Okay. You hear me? Okay.
We got you.
I'm Anthony Lapiana. I am with Zurich now since 2006, so it's coming up on 20 years. I am a civil engineer, graduated University of Pittsburgh. I was in construction management a long time. Started with my father, who was a masonry subcontractor. He was also a bricklayer, and I worked with him as long as I could stand it, and moved on to the dark side, to GCs, and then ultimately started working with developers, and now I'm completely out, and I lost 100 pounds once I got out. So I work in what we call risk engineering, and we evaluate both potential customers and projects for policies, and then we are also involved in claims. And because I have I'll call it a wet trades background, my father, I started working with my father when I was 10 years old, doing side jobs. Ended up in the laborers local number 376 in Pittsburgh. And we also had a lot of projects where there were like big boxes where there was masonry up to a certain point and then EIFS beyond. And we had the scaffold halfway built for EIFS, or for masonry, so we just continued it up for EIFS, which is probably not a real advisable thing to do nowadays. But I spent a lot of time working with the EIFS folks, moving up the foot hop for them as they were building their walls. So I got to see a lot when I was younger and in college. And so that's my background for now. Zach?
So quick survey. Anthony and I are viewed as experts on EIFS within Zurich and I guess to an extent within the insurance industry. I would count all of you as much greater experts on this topic. Show of hands, do you pronounce EIFS like EIFS or is it EIFS? EIFS? Told you.
You win.
So
You win.
I bring up this really bad joke because you've heard the two of us pronounce it differently, and we're the experts in our field, right? When we have conversations like this, you get 2 or 3 or 4 or 5 insurance people in a room, you'll get lots of different answers to that question. But I think the important thing for you all to understand is that acronym is often translated by the insurance company as construction defect loss. All right, and I hate to say this, but I need to get it out in the open. The insurance industry doesn't like your product. Not a lot of surprise looks there. And really has to do with the loss history, right? And the monies spent in defending lawsuits associated with claims. Quick history lesson. So as you are all probably very well aware, EIFS was created about 80 or 90 years ago, imported into this country in the 60s and 70s, became really popular in the 70s and 80s because of how insulative it is. Right? It's a great product. With that popularity, unfortunately, came a lot of shoddy installation and lawsuits. Over the last 20 or so years, this industry has reacted. Our industry has reacted as well. We'll get into that in a minute. Improved training, improved products, improved awareness, and because of that, the insurance industry attitude towards EIFS has improved. Air quotes around improved, because the bar was really low. Right? 20, 30 years ago, you largely couldn't get insurance for this product or for the installation of this product because of the losses that the industry was reacting to. Again, not a lot of surprised looks out in the audience. Want to talk about claims?
Well, yeah, while we're talking about claims, at Zurich, we've been involved in a couple of claims. And we have to be very careful about what we put up here because we can't put any names of buildings, any names of customers. So you see a very general description of a project. This is a hotel here in Florida. It was completed in 2004. And what is significant about this project is that most of our EIFS claims are wood substrate. This one has CMU and concrete as a substrate. And what likely occurs here is you've got a building that's not exactly monolithic in nature at all. And you've got penetrations, fenestrations. There's so many opportunities to have a flashing boo-boo on a building like this. And so this is not surprising other than it's a concrete block building, which is kind of surprising to me. But the claim amount, now when we talk claim amounts, we're talking not just what we pay out to repair the damage, but it's also in-house counsel, the counsel for the opposing, the plaintiff. It's soup to nuts when we talk amounts here. So anyway, this one was 14 million plus, and I was a little bit involved in this years ago, and it was just surprising to me how they actually had damage in the mortar of the block. It was not just, well, we had water in the wall, the block got wet. There was mold in the mortar, and it was that excessive. So this project, I like to bring this up because this is like the worst of the worst, okay? This is a project which is not wood framed. It's what looks like a masonry wall bearing project, and with the problem that you had, the claim became quite substantial, and so this is, to me, this is sort of the extreme case, okay? Next slide is a little more typical of what we get. This is a college dormitory in California, was completed in 2014, and now you had EIFS cladding on wood frame building with OSB. And I've got to tell you that my personal thoughts are OSB. It is great for flitch plates on trusses. I wouldn't use it any other place, anywhere. Okay? Anyway, so anyway, this is sort of your typical EIFS type claim. It's a $2 million claim. They had to go in and remove the EIFS and replace the substrate that got damaged. And so this is more or less, like I said, your typical EIFS claim that we see. Sorry, go ahead, Zach.
So, last survey of the day, I promise. Quick show of hands. Who in the room represents manufacturers?
Yeah, I'd like to see that. Okay.
Distributors?
Okay.
Construction? Pretty healthy mix.
Yeah.
So, typical claims Anthony was just talking about. By and large, Zurich sees and the industry sees EIFS losses as installation related. Sorry for all the contractors in the room. Those last two slides, I believe, entirely were associated with contractors building those buildings.
Yes.
There was not a products concern, right? So within the confines of your liability policy, actually, one more survey, I'm sorry. Anybody here involved with placing insurance for the firms you represent? Okay. In the confines of your liability policy, the policy will react to your product. Now, your product, if you're a manufacturer, is the EIFS system. If you're a distributor, your product is the EIFS system. It becomes your product when you take control of it. If you're installing that product, you don't have a products risk. You have a completed operations risk. Functionally, it's the same. The vocab lesson is just to make sure we're all on a level playing field as you hear me say things like products or completed operations. Completed operations, I'm talking about contractors, products, everybody else in the room. This loss is a class action suit where not only were the installers named, but the producers and the distributors. In addition to allegations about poor installation technique, the allegations in this suit also alleged that the product was deficient, that the manufacturer knew or should have known that it was never going to perform to standard. And the same allegation was made against the distributor. Again, once the manufacturer sells that product to the distributor, it becomes their product. The distributor should have known that this product was never going to function as designed. And you can see the price tag at the bottom, right? 12 million plus. Those are not all insured costs, meaning some of you in this room spent money in addition to the insurance companies spending money. Not only is there damages paid, but there's also maintenance costs. And you can put a dollar sign next to that, but then you can also think about the administrative burden and the costs associated with your maintenance of those expectations. It can become costly. But it's important to recognize that from an actual loss scenario, insurance companies typically are more concerned with installers than manufacturers or distributors. Doesn't mean you don't have risk, and we'll talk a little bit later here about risk management techniques manufacturers, distributors, installers can employ to improve their risk profile. As we think about risk profile, I think it's important for us to pause also to talk about how insurance companies think about loss. And we can think about it in two buckets. Attritional claims, like these, are small dollar, relatively speaking, can be contained within the liability product, right? Your GL policy, your umbrella policy, whatever, and are typically not going to result in balance sheet impairment for the insurance company. Those are big sums, don't get me wrong. You all pay me a lot of money though, and I hope to keep some of that for my profit. Most of it goes back out the door to pay losses, right? Those kinds of claims are concerning. Far more concerning, however, are loss scenarios that look like this. Chinese drywall. Everybody remember Chinese drywall? So, as we think about the risk associated with installing EIFS, we can think about buildings that look like this or like this, and we can think about the worst case scenario. Worst case scenario, you have to tear the entire facade off this building, repair, rebuild. Chinese drywall tells us a slightly different story. There's a corollary, right? Chinese drywall presents catastrophic loss potential. Balance sheet impact for my company. The insurance industry didn't collect enough money to react to a situation where hundreds or thousands of homes were impacted. So as I hear you say things like, I can't find insurance, or it's so expensive, I want you to understand that your insurance company is thinking about the risk that you represent, your risk profile, and the systemic risk presented by your industry. And as we monetize the transactions, not only do I have to pay for your smaller claims, but I also have to fund for potential catastrophic claims, right? The price of things just keeps getting more expensive. Anthony?
So this is me, yes. So the things that are takeaway when we look at claims internally is that, the installations of this product is difficult, but, the problem seems to be more stemming from production. Being a subcontractor, an EIFS contractor, like any other subcontractor, is all about production. Hell, I can remember when my father used to call me up at noon and say, how many brick do you have laid now today? And then I get another phone call at the end of the day, well, what was your final total? Their primary concern, number one concern, they'll tell you differently, but their number one concern is production. And that's it. Now, they will also try to work in quality control, but the problem is that they need to install as much product as they possibly can in a short amount of time. That conflicts with quality control. And, as you can understand, most contractors prefer systems that don't rely on mechanical fasteners for attachment. They'd rather just stick with the cementitious adhesive, because you can go faster. Manufacturers are also incentivized to continue to produce a system which is cheaper, because it will sell. It will sell with the architects, it will sell with the owners. Wait a minute, I got an EIFS product here that's $4, well, I'm just throwing some numbers out. $4 a square foot versus something that's $8 a square foot with the attachments. Obviously, the demand is for the $4 system. Then there's products out there that in what I've been looking at in the last 6 years are products that are characterized as drainage EIFS that look exactly like barrier EIFS. Okay? And there's decades of case law stack up against you guys by plaintiffs to assert that, well, your manufacturer should know that this product's not going to work if you don't have quality control out in the field. So that's what we have stacked up against this in these claims. Zach? Okay, so going back over the types of EIFS, I don't think I'm telling anybody anything here that they don't already know. The original EIFS was barrier, and the thought was that there was no way in the world that water was going to get through the lamina and get inside the insulation, but it did. So the water had no way to get out, because as I was told back in the 70s, I guess the same time EIFS came out as a viable product, that drywall came out as a viable product. Until then, the plasterers had all this work. So what had happened, as I understand it, I didn't know this myself directly, but as I understand it, the internationals got together and the plasterers who were losing work inside, doing plaster work, somehow ended up with the EIFS work. And that's how plasters ended up installing EIFS work, because they were running out of work on the insides of commercial projects. So, again, how does a plasterer apply his product? Like this. And it's very hard to get them to go like this. Okay, but that's how they did it. And when you put the adhesive on this system, and the water would penetrate the system, there was no way the water could run down through the adhesive. It was trapped back there. So that's why I think the EIFS industry came up with something that I think is the smartest way they could have done it. They used a system, which I'm going to call the masonry wall drainage system. I don't know there's a better word to describe it, but again, you've got brick on the outside of the building, and all brick absorbs water. In fact, if you go into CSI specifications, there is an ASTM spec for brick that talks about how much water it can absorb and still be viable as a product to use on veneer masonry. So the water gets through the brick and the mortar joint, gets to the back of the brick, and then starts, due to the cavity back there, it starts to drip down the back of the brickwork. Now, if you've got reinforcing like a door wall or pinnacles and eyes, they also have little drips on the reinforcing that goes through the cavity to make sure that water also drips when it hits that reinforcing. But again, it gets down to a piece of flashing and back out through a weep hole. So again, what it appears to me is when we look at this third slide, which is drainage EIFS, it looks like something similar to a masonry system where the water penetrates the lamina, gets through the insulation, but it has a way to get down, and it's not relying on trying to find its way through grooves in the adhesive. It's got a clear path down, and it allows the water to be released through flashing and weep holes. But again, even it goes more to quality control, because even if you use a product that adheres directly to the substrate via adhesive, and you use this type of method, the beaded adhesive, if you press too hard, you get this. And so there's a conflict here between adhesion and drainage, is the way we see it. Which if you go to a channeled insulation type or a fluted membrane that is on the substrate, you've only got a portion of the surface contact for adhesion. So it is I can see why you end up using mechanical fasteners in addition to the adhesive. So there's sort of a conflict there between adhesion and drainage, and they work against each other. I know this guy here isn't a member of EIMA, so I'm sorry for that photo there, but these are some of the systems that we look at that we want to insure, because the PebbleTex has the channeled insulation. There's a way for the water to go down the back of the insulation. And this total wrap, that drainage wrap, I believe is fluted, and there's a way for the water to get down. It's not relying on traveling through the adhesive to get down to the bottom of the water. Because one concept I want to make sure that we all understand is, yeah, we're the bad guys, we're the insurance company, we're the ones that have to say we won't insure it. But when we don't insure your product, that's money that we lose too. And so Zurich has engineers who to say, okay, it's EIFS, we don't want anything to do with it. No, we want to see your system. We want to see the type of system that's being used in the wall, and potentially we can insure something like that because it does have what we call internally positive drainage. Zach?
So let's talk about risk management. It's a good segue, by the way. We didn't practice that.
Yeah.
Talking about the shift in attitude, right? Carriers for a very long time have enjoyed the luxury of being able to say, no, we don't want to insure your product. Things have changed, right? And Zurich and other carriers are willing to provide affirmative coverage, limited coverage, but your access to that insurance is largely predicated on your ability to demonstrate how you think about the risk associated with your products, how you control that risk, and ultimately how you communicate those standards to your insurance company. Not to jump ahead, but somewhere at the end of this slide, at the end of this presentation, you're going to hear me say about the value of differentiating yourself in the marketplace. Insurance industry is a very reactive industry. We spend an awful lot of time looking backwards. Remember all the claims we showed you earlier? That informs our future in ways that you can't help, frankly, right? We've paid these losses. They are part of our shared history. They influence our decisions around appetite, whether we want to say yes or no, pricing, right? And this industry has evolved. What Anthony was sharing really boils down to your ability to educate your insurance company about how your risk is better than all EIFS risk, right? The monolith that I've already said we don't like is the secret to getting insurance. So we're going to talk a little bit about risk management techniques. First of all, quick educational session just to teach you about how insurance companies think about risk. Now this is specific to EIFS. Like I said earlier, insurance companies tend to translate EIFS as construction defect. You can use this information to think about any potential construction defect related risk. I see a lot of people taking pictures and videos. We are going to share this deck with all of you, so don't feel pressured to sit there with your phone. If you want to, that's fine though. So insurance companies are going to want to understand some basic demographic information about your product. What is your relationship to EIFS, right? Simply, is it your product? Are you an installer, right? Where is your product being sold or installed geographically? Matters. What kinds of projects? Stick-built, concrete steel? Is it residential? Is it commercial? All of these facts influence the potential for loss. What is your history with EIFS? Right? Is this a space that you are persistent in? Are you transient to it? Are you new? Right? Do you have loss experience that the insurance companies can look at? Dirty secret, I don't think any insurance company has figured out a way to isolate EIFS-specific construction defect losses. Instead, insurance companies are going to look at your products losses or your completed operations losses and lump them all together. And they may tease out from there how many or how many dollars are associated specifically with EIFS, but probably not. So being able to demonstrate your thoughtfulness, your understanding of the risk, how you're mitigating that risk matters, right? I think I've covered all those bullet points. So talking from the perspective of a manufacturer, and I'm not going to read all of this slide at you. I know it's lots of words. Really want to focus on the highlighted items. To me, these are the most critical things manufacturers can do to improve their risk profile. Having a quality control process through which you are managing your raw material intake, your production process, and inspecting your final product, right? Improving the quality, making sure that what you are producing meets your design specs, that it's going to perform as expected. Having a really great paper trail. Documentation is critical. Anthony earlier shared that some of the dollar figures we put up there were damages, right? Money spent to fix a building. A lot of the money up there is defense, paying lawyers to explain what went wrong and why you're all not liable. Paper trail, your documentation around the process that you have, helps support your defense. If you don't have a paper trail, it becomes difficult and expensive for us to mount a defense on your behalf. Retaining that information is also critical, right? Having a paper trail that you can't access is not very valuable. And having a retention policy that flexes to individual statutes of repose is also important. Right? The amount of time available for a plaintiff to make a claim against you differs by state. Your approach to managing your records needs to take that into account. Stephen, we were talking in the meeting earlier about training. Across the board, the most important thing that everybody in this room can be doing. Manufacturers, you create a product, as Anthony shared, that's really kind of difficult to put in place correctly. You sell that product and hope that your installers will put it in place correctly. Maybe. How do you transmit the education that you have, right? The thought capital, the knowledge about how your product is to be installed to the people who are actually doing the work. And as we think about cost containment, I would challenge everybody in this room to think about money spent on training, whether that's training for your employees around the quality process you have in your manufacturing facility, or it's training that you export through this ecosystem all the way down to two guys in a truck putting up your product on a building, is investment. Because otherwise those dollars are going to be spent paying me or paying losses that you otherwise could have avoided. And having a good warranty, right? Making sure that you are very clear in how you communicate what your product will do, what it won't do, is also critical. It becomes the benchmark against which you will be measured. As we shared earlier, distributors have a very similar risk profile to manufacturers. Once that product leaves the warehouse and gets to your facility, it's your product. You have responsibility for it, right? So a quality control process that understands and inspects product as it comes into your facility, that you're managing your inventory well, that you have a feedback process, right? I hope this isn't true, but I'm going to guess not 100% of the products that come from manufacturers are perfect. Is there a process for distributors to send that material back? Is there a process within the distribution team to even identify quality issues, right? Or are we just pumping product through? Training. I think I'm going to say training 2 or 3 more times today. Are your employees trained on proper installation techniques? Are you exporting training to the individuals and the teams that are actually installing this product? What service do you provide to those individuals? Right? And on the installation side, you heard me say earlier that EIFS translates as construction defect. Having a robust quality control process is critical. Lots of words up here. The punchline of this slide really is having a water intrusion mitigation process. Third-party inspections, water testing, pre-installation huddles. The reality is installation is being done quickly. Sometimes it's shoddy, right? And while it's expensive to course correct during construction, it's far more expensive when you learn about a problem after that building is done. So earlier I shared that geography matters. I'm not a lawyer, so don't take this as legal advice. But where your product is sold and where it's installed will impact the loss potential. The highlighted states here have strict liability standards, which means you don't have to prove any negligence. You only have to prove damage. Water got into the building. There's mold. Right? Somebody has a respiratory ailment. Whatever. Strict liability. It will come back to you. Not surprisingly, these same states are the states that insurance companies are most concerned about. These states also tend to have higher population, more residential construction, and to a large extent, more wood frame. That's a terrible recipe for success, right? That means, in conjunction with the legal environment, we will anticipate seeing more loss potential, more loss activity when you have more risk, more exposure, more work in these states as compared to others. So as you think about your risk management techniques and as you think about your risk profile, don't miss an opportunity to flex your approach based on jurisdictional impact. So this is an example of an underwriting questionnaire about EIFS. It's actually Zurich's. I'm not going to read this to you. It's an example of how insurance companies ingest your information. You heard me say earlier, it's important for you to teach me why your product is better, why your methods are better. These questions get to some of the demographic and characteristics that I talked about 6 or 7 slides back. Right? What's your relationship to EIFS? Where are you installing it? Where are you selling it? How much is residential? What's your loss history? Right? This helps underwriters think about the quality of your risk and helps inform their decision to say yes, right? Because as Anthony said, every time I say no, I don't get paid. I have to find a way to say yes, right? But this is pretty superficial. You may see something like this. You may see exactly this, depending on if you're one of my clients. How you answer these questions, though, matters, right? Because it demonstrates your understanding of the potential risks involved, and it also illustrates, to a certain extent, what your controls around those risks may look like. Once an insurance company gets these answers back, thank you for taking the survey, by the way, we may have some additional questions that get into more of the technical side.
Sure. So anyway, I speak for at Zurich. At Zurich, we don't want to issue the blanket, it's EIFS, we don't want anything to do with it, okay? What we do is we will evaluate it on a per project basis, and to fully evaluate it, we need plans of the exterior elevation, so it doesn't look like that 51-story building where we had a problem. If the more monolithic in nature that it is, the project is, the better it looks to us. We'd like to see the sections and details of all the exterior elevations, all the spec subsections, the shop drawings, and to me, what is actually most important is the submitted and approved product data for the system, which includes all these items. We'd like to know what manufacturer's system it is, so we can understand whether it's a drainage system or a barrier system. So we want to look at these things and say, yeah, this looks like something we can insure because it's got, you know, a methodology of drainage that we know, we've come to know works. So that's why we look for everything on this list. Anything, I can't think of anything that somebody would want beyond what is right here. This pretty much is soup to nuts. But it tells us the entire story. Zach?
So as you think about influencing insurance placement, it all comes down to educating Anthony and I, right? The more we understand your operations, the more we understand the mechanics of the product that's being sold or installed, the closer you are to a yes. For years, however, the answer has been no. This is an industry standard EIFS exclusion. Many of you probably have this endorsement on your GL policy, in your umbrella tower. I'm not going to read this to you either. Largely, it says you don't have any coverage. You don't have any coverage if you're a manufacturer, if you're a distributor, if you installed it, if you repaired it, if you're maintaining it. You don't have any coverage. For decades, this was the standard. And this endorsement is produced by a company called ISO. Any carrier that is ISO subscribing is going to use something very similar to this, or at least build their own proprietary version of it. The important part of this slide is there's no coverage for you if this is on your policy. But things are changing. by the way, we use this exclusion. Today, you may be able to find limited coverage. This is an example of a Zurich endorsement that we use to provide limited EIFS cover. The highlighted part is the important piece. All the words that are not highlighted, largely redundant from the slide previously, right? The unhighlighted sections say you don't have any coverage. Manufacturing, distribution, installation, maintenance, etc. However, the exclusion doesn't apply in situations where the building is not wood frame or not residential, right? So effectively provides affirmative coverage for concrete or steel structures, right? Commercial grade buildings, so long as there aren't any beds in it. Okay? You may also succeed in having your EIFS exclusion removed, but it all comes down to how you differentiate your risk profile, right? At the beginning of this presentation, I told you, I don't like your product. All of my friends don't like your product. But we get paid to say yes. If I say no, I don't get paid. So how do I find the opportunities that I think are going to be the best options for me to make money, right? Not paying losses out. That all comes down to differentiating your risk profile, right? How can you demonstrate to me and to Anthony that you have a better command of the risks associated with your product, that you are actively working to contain those risks and mitigate them, and that you have good process and procedure to help me defend you when there is a claim, because I got to tell you, there's still going to be a claim, right? How we can all work together in defense of those claims matters. How you talk about your risk approach matters. And how you present that information to me and to Anthony matters, because it's easy to say yes, right? But again, I don't get paid unless I say yes. I think that's our last slide. Not bad, Anthony. So, questions? Sir?
When I heard you, sir, talking about adhesion
Yes,
and the channel adhesion,
yes.
okay, and that you think that is a barrier system, so you do not accept official testing of the systems that, that those, every EIFS system has to prove at 80% drainage is applied correctly. So
Okay.
it is not, if the channel adhesive is not a barrier system, it is a drainage system.
Not quite.
But, I mean, you may look at it a little different, but I can tell you that in here, there's a lot, not me, but in here, there's a lot of experts that can prove you with official testing results what the drainage potential is of the system. So I don't believe really, or you might want to look into that before you make a judgment on the drainage, because your risk is much bigger if you drill holes in the waterproof substrate to install a channel piece of foam.
I understand what you're saying. If you're going to use the mechanical fasteners, you're penetrating whatever's there. I understand that. And then there's also the risk, but hey, I just put a metal product into a location where we've got water running down. And that metal product can corrode after a period of time. Yes, I understand what you're saying. But what I'm saying is, I know that when you have the systems that are out there that have a cavity or a channel or a flute where the water is easier to drain down, it drains down more quickly. I'm not saying that it will never, ever drain down through adhesive, but I will tell you that I have actually seen, and I'll tell you where it was, Dayton, Ohio, a casino that's there that had an adhesion problem. They came out and removed that product, and I actually saw water that went up by capillary action. Okay? So I'm not going to tell you it's not going to drain. That's speaking in absolutes, okay, which is probably not a very good thing to say. But I'm saying it works a lot better with a more open system than simply draining down through adhesive. That's my comment.
First because, to Fabio's, there's much more people in this room than myself. But I am a 35-year applicator of putting on EIFS systems. I've been through it all. You and your friends don't like the word EIFS. Me and my friends don't like the word Zurich.
Fair enough.
And I'm from one of those states that's highlighted. Okay?
Yep.
And I'm where Gallagher, you know who they are, come into town and OSEP and CSEP the hell on us, and you back them up and immediately take EIFS off our products. Okay? I was excited when I heard that you guys were coming because Steve in Atlanta said, hey, we're bringing these guys in. And so my question to you is who all this is, and I also sit on an insurance board, so I understand risk big time, is are you interested in writing insurance? And I'm not saying for me, the applicator. These manufacturers are all, you know, they got their own insurance, right? I'm more concerned about the GCs and the owners of those properties that you're denying of the visa. If you're looking to do that, you want to come up with a plan. Stay for the next session. You'll hear us talk about the educational program and what we're pushing for, okay? And I agree with that. That's what I want to know. Because honestly, there are so many guys in this room, your description of EIFS is not good, is what I want to say.
I'm sorry, can you say that again? My what?
Your description of EIFS is not very good. And very many of these technical people in here, you know, I'm embarrassed for them because they are super smart. I rely on them. I can also tell you, I said this last year in Dallas, I've never seen one manufacturer failed product in my 35 years, not one. But I've seen a lot of applicators do shitty jobs, okay? And so, yes, I agree to your risk. You wrote a lot of stuff. Also, when you have an issue, you guys weigh out between how much your attorney's going to cost you and how much it's going to pay out. And unfortunately, sometimes it's not the product, it's not the product. You just decide that, hey, we're just going to cut our losses and we're going to move on. And I'm a fighter. I'm like, no, we're going to say we didn't do it wrong, we did it right. I'm pleased to say that in 35 years, we do not have a claim, and we continue to hope that's the answer. I also can tell you that I don't have any of those exclusions because I went to my insurance carrier, right, who I didn't have for 5 years because of, North Carolina, right? And I paid out the nose to have these insurance. So, and I'm an advocate of that. I'm saying, guys, but I'm an advocate for you as well, saying, yes, I want you to write these projects. Let's come up with a plan that you can say, hey, if they do these steps on there, 100% we're going to write that job.
Yep. So I'd love to give you a simple answer to your question. There isn't one, so I apologize for that. I think the short answer is, generally speaking, insurance carriers today are more willing to write EIFS risks than they were 30 years ago, right? We've all learned some lessons. You're right? The nature of how insurance coverage is placed on a construction project can create some complications, right? So you rattled off a couple of acronyms for insurance wrap-ups, right? For those of you who aren't familiar with how a wrap-up functions, the owner of the building or the GC buys insurance for everybody on the job site. Super simplified scenario. When that company places the insurance, right, they're placing on your behalf, right, the applicator. You don't get a say. The nature of wrap-ups are intended to provide uniform coverage, which means if there's an exclusion, it applies to everybody. If there's not an exclusion, everybody has coverage, right? To a certain extent, insurance carriers' willingness to provide coverage on a construction project is inherently a scale play. Is there enough money for me to be comfortable with the risk, right? Is the project big enough? I'm not surprised to hear you say that you've never seen poor product. I said earlier that most of our losses and most of the industry's losses are installation related. Doesn't mean that the producers, the manufacturers, can't get pulled in. We saw a slide up there that proves it true, right? And I think that occurred in North Carolina as well, right? More often than not, more than 9 times out of 10, it'll be the guy troweling the wall who's liable. So how do you solve that? Awareness, right? Demonstrating to your carrier that you understand the risk. The answer may still be a no. But through good communication and sharing what you know about good application process, subcontractor selection protocols, how you train the people on the job site to do it the right way, and your approaches to course correct midstream are critical. If your answers to those questions are not confident, or worse, we're not thinking about it, the answer is going to be no. or it's going to be so expensive, it's effectively a no.
So, I'm Frank Nunes from Northern California. For a period of time, I did a lot of construction defect work, mostly all defense, a lot with Zurich, some on beach, pre-coat plaster, other cladding, water intrusion issues. Some was marked from installation, some was improper specifications from the manufacturer or the architect. Often it was another trade's system not properly integrating with the system, right?
Yep.
You've seen all that.
Yep.
So we spent a lot of time, what I would spend a lot of time with was educating the defense attorney on the system. Also the Zurich reps, and there were different levels depending on the claim. So a lot of teaching them how to defend this product, this system, and most often it was the applicator. And, you know, it's kind of like pushing water uphill. The information you get to a certain level. Sometimes it will get a little further. Sometimes you might come out on the project depending on the level of exposure. And you get a little more information a little further up for a short period of time, and then you go back to the next case. So all of this discussion today, from what you presented, we've seen a lot of things that could be probably cleared up or better explained. Is there a process, is there a way for an industry to communicate better with jurors? You see what doesn't work most often. You don't get paid to see what does work. So there's empirical data. But there was a committee at one time of, and I think EIMA might have been part of it, there's an insurance group that meets kind of like the group that tests the crash test dummies. But there was something like that in construction. I think we spoke to those groups maybe 10 or 15 years ago. But my basic question is, there's a lack of communication. There's just like on construction, sometimes things don't completely integrate. Is there a way or a process where Zurich has a committee or somebody, some outreach that can get more accurate information and maybe even have somebody or some group do an overview of what you're seeing? Is that, how do you qualify besides just in a, no offense, but in a bubble, right?
Yep.
Kind of in your corporate views and exposures and risks.
So from an industry to industry standpoint, probably not, right? You will struggle to get all the carriers to pay attention to the same message simultaneously. I think a lot of that outreach and education can be accomplished kind of case by case, right? Where you have that conversation with Zurich, and then you have basically the same conversation with my competitors, and you're rinsing and repeating over and over and over again to improve the level of acumen across the industry, right? Because the scenario you described, where you are working with your insurance company to educate them while defending a claim, you didn't say this, but I'm going to read between the lines. You're pushing that water uphill because the industry has learned some very expensive lessons, right? Culturally, we're already preparing to spend money on something that we never wanted to insure to begin with. So when you tell us it's great, it's hard to hear that.
Well, it doesn't matter contractually, everybody's in.
Yep, exactly.
When that applicator signed that contract, it was given by the general contractor,
Yep.
on and on, you're guilt by association.
Yep,
So-
well put.
So that is what it is.
Yep.
And if an applicator goes in thinking something different, they're probably really big gamble in private. But some of them are more successful at it, and some of them are able to control their applications, and some have better luck, and they have better partners in this other stuff. But all that said, yeah, it's challenging, but it's like, is there just a method where they can meet more in the middle?
Yeah.
Knowing all those risks, it is what it is, and nobody's perfect. Somewhere to help you better write policy, to help you better defend policy, to help the applicators and the manufacturers understand, kind of the liabilities or the responsibilities.
Yeah, so just spitballing here, because we're a Q&A session and I don't have answers for your questions on my slides. Piggybacking on the conversation before lunch, I think there is an opportunity for EIMA to improve how it exports knowledge to the insurance industry, right, as a function of this group. And I don't know where you are, there you are, Barbara. EIMA is a great example of a forum where you might have lots of stakeholders throughout the construction and building product manufacturing ecosystem, as well as carriers, to have a captive audience to talk about the evolution of EIFS-related risk, right? Forums like that probably serve the best opportunity to get as many people in that audience so that you're not rinsing and repeating ad nauseum. But I think in addition to participating in events like EIMA, you still need to have conversations with your carrier and with your broker or agent to make sure that they understand your risk. And if you don't think that they do, then they don't, right? And that means that you have to do more to educate them. Right? You are all the experts on this topic. We just pretend to be.
So with that said, we have a timetable. So I wanted one more question, and then we thank Zach and Anthony for being here.
Sure.
And they're going to be around, so you guys can talk one-on-one with them. Yeah. But just in order to keep up
There's a guy back over there, Zach.
It sounded like education over there. And the question I have is specifically to education and to a part AB, so I can get maybe these questions going. But one is, where do most insurance agencies get their education? Because it seems like there may be the general consensus from everybody here that you guys have a little bit lack of knowledge of that. So where do you get your education from? And then you did specifically say that you look at EIFS as construction defects. I'm curious to know what other construction products do you see as construction defects that you guys look at?
Okay, so part A to your question, where does everybody learn about EIFS? EIMA and tribal knowledge. So largely, I learned about EIFS by going to functions like this and talking about EIFS, going to EIMA, talking about EIFS, meeting with contractors, meeting with installers, meeting with manufacturers, right? But most of my education came from people who had jobs like me, who came before and told me, I don't like EIFS, right? So I've got that rock in my head already, but I don't get paid to say no. So how do I find that balance point? For your agents and brokers, very much the same thing, right? They are learning on the fly. They are not experts, right? They have learned from the people who came before them or going to conferences like this. And there's not a lot of great, positive material available that highlight EIFS. I can quickly Google all sorts of stuff around EIFS, and most of the feedback I will get, I will translate to construction defect. Right? So there's an opportunity to push better, more positive education around the nature of the product and how to install it correctly. But it's a long road, right? There's no fast answer. One more?
You only hear about the projects that have problems. You only go and see the projects that have problems. You don't see the ones that haven't problems. And there are a hell of a lot more out there that are performing than there are that have problems. And my job in my company is I am the chief curmudgeon. I say problems because I looked at some of those and I know that's not a new product. And I know that that's not a Mercury Line Rain Street brick. So we have to say, where do you heard it? Where do you get your information from? And because I don't represent any company here, so don't take it out at anybody else.
Yep, you're absolutely right. So we have a shared history of me paying losses on your behalf, right? That informs how I think about your product. It informs how I think about what could happen tomorrow. And you're right. We only see the poor outcomes, right? So we're constantly in a feedback loop where we are affirming our fears. We have to find a way to break that feedback loop to a certain extent. My industry exists to pay claims, right? That's not going to go away. How can we add to that chorus so that the sort of doom and gloom attitude on this product evolves or continues to evolve to a place where we are much more accepting and understanding. And I think we're at time.
Thank you.
Thank you.